A NASDAQ listed stock just exploded 500% in 24 hours. This massive gain represents one of 2025's largest single day stock moves. Forget Bitcoin. You can make better returns with stocks that invest in it. On June 16th, 2025, while you were probably scrolling through social media, SRM Entertainment stock went from $1.45 to $9.19 in a single trading session. That's a 533% gain in a single day. But here's what's crazy. This wasn't some random pump and dump. This was a calculated strategic move that reveals a massive opportunity most investors don't know about. And I'm going to tell you exactly why this happened at the end of this video. But first, you need to understand what public crypto vehicles or PCVs are, because they might be the most underrated investment strategy of 2025. Here's a question that will blow your mind. What if you could invest in Bitcoin without actually buying Bitcoin? What if you could get exposure to crypto gains through regular stocks that you can buy in your normal brokerage account? Most people think that there are only two ways to invest in crypto. Either buy Bitcoin directly or invest in a Bitcoin ETF. But there's a third way that institutional investors have been quietly using to potentially amplify their crypto returns. It's called investing in public crypto vehicles or PCVs. Think about it this way. During the gold rush, when gold prices went up, the gold mining company stocks went up even more than gold itself. The same principle applies to crypto. And the numbers are absolutely insane. MicroStrategy, the poster child of this strategy, holds 592,100 Bitcoin worth $63.5 billion, and their stock has gained 35% this year. But that's nothing compared to what we've seen elsewhere. In today's video, you will learn what public crypto vehicles actually are and why they exist, the 4 types of crypto proxy stocks and which ones work best, real case studies of companies that made investors millionaires, the exact strategy behind SRM's 500% explosion, and how you can invest in PCVs, and the critical risks you must know. But before we dive in, smash that like button if you want to see more videos breaking down complex investment strategies, business case studies, and personal finance topics. And subscribe because we're about to uncover some serious alpha. Let me start with the most important type of PCVs, treasury strategy companies. These are traditional businesses that have decided to hold cryptocurrency as a reserve asset instead of cash. The king of this strategy is MicroStrategy, now rebranded as Strategy. Their CEO, Michael Saylor, has turned his business intelligence company into what he calls a Bitcoin treasury company. Here is how genius this strategy is. Instead of keeping cash that loses value to inflation, Strategy raised money through debt and equity to buy Bitcoin. They currently hold 592,100 Bitcoin worth $63.5 billion. That's almost 3% of all Bitcoin ever mined. Their average purchase price is $66,000 per Bitcoin, which means they're sitting on a neat 61% profits on their Bitcoin holdings as of June 17, 2025. But here's the kicker. Their stock often moves more than Bitcoin itself. When Bitcoin goes up 10%, Strategy stock might go up to 15 to 20%. It's like buying Bitcoin with a built-in leverage. Have you ever wondered why this works? It's simple psychology. When Bitcoin pumps, investors get FOMO. But buying and holding Bitcoin safely feels complicated and risky. But buying a NASDAQ stock? That's easy. So money floods into these stocks, creating even bigger gains. The second major player using this strategy is Tesla. Elon Musk's company holds 11,509 Bitcoin, worth $1.23 billion. While Tesla isn't as aggressive as Strategy, they have proven that even traditional automakers can use crypto as a treasury asset. Now let me tell you about the most explosive success story of 2025, Metaplanet. It's a Japanese investment firm that decided to copy MicroStrategy's playbook. On April 12, 2024, Metaplanet was trading at just 34 yens per share. As of June 17, 2025, it hit 1,850 yen. That's a 5,345% gain in just over a year. Let me repeat that. If you invested $1,000 in Metaplanet when they announced their Bitcoin strategy, you would have over $54,000 today. I luckily got into Metaplanet on May 23rd, 2025. From that point to today, Metaplanet surged 125%, while Bitcoin actually fell around 4%. This shows the incredible leverage effect that these public crypto vehicles can have, even when Bitcoin is declining. The company currently holds 10,000 Bitcoin acquired for about $947 million. But here's what makes Metaplanet special. They are funding their Bitcoin purchases through zero interest bonds, essentially getting free money to buy Bitcoin. This means that they can borrow money without paying any interest and use that money to buy an appreciating asset. It's like having a credit card with 0% interest forever to buy Bitcoin. This stock is becoming Japan's version of MicroStrategy, and smart investors who recognize this pattern early made life-changing returns. The next type of public crypto vehicle is service providers, companies that make money when crypto trading volume increases. Coinbase is the perfect example. Their primary business revolves around providing cryptocurrency trading services and custody solutions for millions of users worldwide. They generate revenue through crypto transaction fees. In addition to these services, they also hold around 9,000 Bitcoin worth approximately $1 billion on their balance sheet as of June 2025. Their stock has gained around 85% this year, and it often moves with even higher volatility than Bitcoin itself. When crypto markets heat up, Coinbase's trading volumes explode, driving massive revenue growth. Bitcoin mining companies like Marathon Digital and Riot Platforms fall into this category too. These companies literally mine Bitcoin, so when Bitcoin prices go up, their profit margins explode. But I personally think mining stocks carry significant operational risks that many investors overlook. These companies face challenges like energy costs, regulatory pressures, equipment upgrade requirements, and operational complexity. For most investors seeking crypto exposure through the stock market, treasury strategy companies might be worth considering as they offer more direct Bitcoin exposure without the operational headaches. The fourth category is financial infrastructure companies. Circle Internet Group is the issuer of USDC, the second largest stablecoin. You might be wondering, what exactly is a stablecoin? A stablecoin is a type of cryptocurrency designed to maintain a stable value by pegging its price to a reserve asset, typically the US dollar. So unlike Bitcoin or Ethereum, which can be highly volatile, stablecoins aim to provide the benefits of blockchain technology while minimizing price fluctuations. They serve as a bridge between traditional finance and the crypto ecosystem. Companies like Circle are interesting because they are less volatile than pure Bitcoin plays, but they still benefit from crypto adoption trends. Think of them as the picks and shovels play in the crypto gold rush. Before we get to SRM's explosive story, let me give you a critical warning using GameStop as an example. In May 2025, GameStop announced the purchase of 4,710 Bitcoin, worth $515 million as part of their treasury strategy. The stock initially jumped 4.4%, but then crashed 10.9% the same day. Despite having $6.4 billion in cash and following the MicroStrategy Playbook, GameStop's stock is down 25.6% year to date. This shows you that Bitcoin holdings alone don't guarantee stock performance. GameStop's core business, which is physical video game retail, continues to decline with hardware and software sales dropping 31% and 26% respectively. When you invest in public crypto vehicles, you are not just betting on Bitcoin, you are betting on the underlying business too. Now let's get to what you have been waiting for. What does SRM Entertainment do, and why did it explode by over 500% in a single day? SRM Entertainment is a Florida-based toy manufacturer which produces licensed merchandise for Disney and Universal Studios. Think toys, souvenirs, that kind of stuff. For a long time, it was a pretty normal, kind of boring stock. But then something totally unexpected happened. On June 16th, SRM announced a $100 million equity deal to establish a TRX token reserve and rebrand the company as Tron Inc. They brought in Justin Sun, the founder of Tron blockchain, as an advisor. But first, let me explain what Tron actually is. Tron or TRX is another cryptocurrency like Bitcoin and Ethereum, but it has some advantages. Tron is much faster and cheaper with processing transactions when compared to Bitcoin. This makes Tron more suitable for everyday transactions and decentralized applications. Now let me explain in simple terms what exactly happened with SRM. First, an investor will pay SRM $100 million. In exchange, SRM will give the investor convertible preferred stock, which is special shares that can later be converted into 200 million regular shares. Think of it as an IOU that can be traded for regular stocks later. Next is warrants, rights to buy an additional 220 million shares at $0.50 each. It's like coupons that let you buy shares at a fixed price in the future. Then SRM will rebrand as Tron Inc. and use the $100 million to buy Tron tokens. And last, Tron founder Justin Sun will join them as an advisor. The markets went absolutely crazy because investors recognized this was following the MicroStrategy Playbook, just with Tron tokens instead of Bitcoin. This was a traditional entertainment company completely pivoting to become a crypto treasury company. But here's the critical question: is this sustainable? SRM went from being a toy and souvenir manufacturer to a crypto treasury company overnight. That's either genius or completely reckless. Alright, so how do you actually invest in these public crypto vehicle stocks? Let's understand their risk spectrum first. Not all crypto stocks are created equal. Here is how I rank them from lowest to highest risk. The safest ones are Bitcoin ETFs with a risk level of 6 on 10. This is the closest to owning Bitcoin directly. Next are established treasury companies like MicroStrategy. With a risk level of 8 to 10, they have a relatively proven track record. Then come mining companies with a risk level of 9 on 10, and they have a high operational risk. And the riskiest ones are the new crypto pivots like SRM. With a risk level of 10 on 10, they are smaller companies and have the maximum volatility. And remember, investing in Bitcoin itself exposes you to around 4 times more volatility than investing in the S&P 500. So imagine multiple times more volatility than Bitcoin. If you still want to invest in PCVs, remember that it's about managing your risk. Consider them the riskiest of assets to invest in. So keep your overall exposure to PCVs small as part of your overall investment strategy. And spread your PCV exposure to multiple companies. Remember, these investments can move 50% or more in either direction on any given day. Look at Sharpling Gaming, the biggest holder of Ethereum among all PCVs. They fell by more than 65% in a single day on 12th June 2025. Now, before you rush to buy public crypto vehicle stocks, here are some important considerations that could help inform your investment decisions. The volatility consideration. These stocks are often more volatile than Bitcoin itself. The MicroStrategy liquidation fear. Here is what keeps Bitcoin investors awake at nights. What happens if Bitcoin's price falls below MicroStrategy's average purchase price of $66,000? If the company faces financial pressure, they might be forced to sell Bitcoin to balance their books. With 592,100 Bitcoin in their treasury, mass selling could crash Bitcoin prices, creating a vicious cycle that destroys both Bitcoin and MicroStrategy shareholders. This scenario could trigger panic selling across all public crypto vehicles. Also, Standard Chartered warns that approximately 50% of all Bitcoin treasury companies could face financial distress if Bitcoin falls below $90,000. Then comes regulatory risk. The SEC continues to evaluate crypto-based investments. New regulations could significantly impact these stocks. Then comes business risk. With PCVs, you're not just buying crypto exposure, you're buying exposure to the underlying business as well. If MicroStrategy's software business faces challenges, the stock could get affected even if Bitcoin goes up. Then comes liquidity risk. Smaller companies like SRM Entertainment or Metaplanet can have liquidity issues during volatile periods. Let me share my personal take on PCVs. I think we are still in the early innings of the corporate Bitcoin adoption trend. More companies may follow the MicroStrategy playbook, potentially creating opportunities for informed investors. But most retail investors should research established players rather than chasing the next SRM. If this video helped you understand public crypto vehicles, smash that like button and subscribe for more business case studies, investment strategy breakdowns, and personal finance content. And drop a comment letting me which PCV you are most interested in.